Hello traders, Gary Wagner here. It is 1:55 in Honolulu, 7:55 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 7th day of June, 2024, and this is the evening report for gold and silver, our weekend review. The combination of two major events took gold prices dramatically lower. First, the People's Bank of China announced a temporary pause in its massive recent gold bullion purchases. Second, the U.S. Labor Department released its most recent jobs report, revealing that 272,000 new jobs were added last month, well above forecasts that were anticipating an additional 180,000 to 200,000 jobs would be added. Gold, basis the most active August contract, settled today at $2,311.10 after factoring in a price decline of $84.10 or 3.5%. Silver, basis the most active July contract, is currently fixed at $29.44 after factoring in the deep decline of 6.14%, a $1.92.5 price decline per troy ounce. The dollar did have a strong gain today of 0.78% and is partially responsible for the exceedingly strong declines in both gold and silver. The dollar index is currently fixed at 104.949. This first chart is a 1-hour candlestick chart of gold futures. It shows you the dramatic but fairly consistent price decline throughout the day. I draw your attention to this first large candle with a timestamp of 1 a.m. Friday morning prior to the release of today's jobs report. This drawdown coming in here is directly attributable to the People's Bank of China announcing a temporary pause in its gold bullion purchases. Realize the Chinese central bank has been aggressively accumulating gold reserves for the last 18 months, buying as gold moved up substantially. It's a logical step that they would pause their purchases when gold has hit an apex or all-time record high. Unfortunately, this dramatic price decline did affect our current trade, executing our stop. Fortunately, we did limit our risk to a very tight stop. Exact details on the members page. In terms of where we could see gold go over the next couple of weeks, we have been talking about the fact that after hitting the all-time record high on the 20th of May, we entered a corrective cycle in which we anticipate that gold could trade significantly lower. But the caveat to any technical study is that these large moves are based on fundamental events. We can use the technical studies to determine where a drop could find support or a rise find resistance, but the precursor to that will be a fundamental event, and next week will contain two exceedingly important events. The first is the next FOMC meeting, in which they will release their SEP, which is the Summary of Economic Projections. In that report is the dot plot. The dot plot contains the analysis by all attending members as to where they believe interest rates will be this year, 2025 and 2026. That will give us an anticipation of what the Federal Reserve is hoping to achieve in terms of interest rate cuts this year, next year, and 2026. The last dot plot release was in March, and even in March, they still anticipated a total of 3 rate cuts this calendar year. Many analysts, including myself, believe that that will be revised to represent either 1 or at maximum 2 rate cuts this year. Also, next Wednesday, the Bureau of Economic Analysis will release the most current inflationary data vis-a-vis the CPI price index report, and the combination of those events will have a profound and meaningful impact on the direction of gold. If producing a negative bias, the first area I would look for potential support would be at around $2,260 to $2,250 based on the 50% retracement of the move that began mid-February when gold was sitting just above 2,000 to the all-time record high at $2,470 basis the August contract. While it is most likely evident that the Federal Reserve statements, Jerome Powell's press conference, will exhibit a much more hawkish tone given recent reports, if the CPI comes out showing a tremendous or even sizable reduction in inflation, then we would want to look at levels of potential technical resistance, the most meaningful one being the 23.6% fib retracement that occurs at approximately $2,370. Market sentiment for silver should be the same as with gold, except expect exaggerated or greater percentage gains or drawdowns. If bearish market sentiment continues, the next level of potential support would come in at around $28.70. If there is bullish support that enters the market, we would look for resistance to occur at $31 per ounce. This has been Gary Wagner wishing you, as always, good trading. We will talk to you after the weekend with our next daily updates and reviews. Bye-bye.